Welcome. My name is Samuel Muchai. You are lecturer in our classes, Accounting Made Simple. Today I want us to do a revision question, CPA1 Financial Accounting 1, November 2017, question 1C. November 2017, question 1C. We are required to prepare a PPE movement schedule. The information says, the following information relates the non-current assets of Jirani Mwema Limited as at 1st of October 2016. You were given the non-current asset, freehold property, plant and machinery, office equipment, motor vehicle. You're given the cost and the accumulated depreciation. Then you're given the additional information. The following non-current assets were acquired during the year ended 30th of September 2017. Number 2, the following non-current assets disposed of during the year ended 30th of September 2017. Then you're told additional information. Number 3, Jirani Mwema Limited depreciates the assets using the straight line method on a pro rata basis at the following premium rates. On 1st of October 2016, the management of Jirani Mwema Limited decided to start depreciating freehold property at the rate of 2.5% per annum. I've always said that the PPE movement schedule is a reformatting of the non-current assets account as well as the non-current assets depreciation account. So if you know the format in the head, you are actually able to get very many marks just by the recapturing of the format. And first of all, capturing the information given in the question. So if I would want to start with the answer there and call it Jirani Mwema PPE movement schedule, Jirani Mwema PPE property, plant and equipment movement schedule. My space is small, so you can, for the year ended 30th September 2017. You can ensure that you capture everything the right way. Now, we say that we have the assets we have, freehold property, we have freehold property, plant and machinery, we have office equipment, we have motor vehicles, and we have the totals. We have the motor vehicles and we have the totals. You could even do lines, because of our small space, Now, if we say balance brought down, and you are told it is shillings in thousands. There are shillings in thousands. So, if you want to say, if you look at the additional information, actually the information at the beginning, we are told that the non-current assets, the opening balance for the non-current assets, so you can say balance brought down for freehold property is 35,000. This is 35,000. For plant and machinery, it is 26,250. For office equipment, is 5250. For motor vehicle is 15,750. Let me try to add more space there. 15,750. So if you add all the opening balances, these are given. You're just extracting and capturing them there. Just extracting and capturing there. 35,123 plus 26,250 plus 52,50 plus 15,750. We get an opening total of 82,250. Our total is 82,250. 82,250. Our total is 82,250. And then we are told the following assets were acquired during the year. So you just come here and you say additions. Remember our format. At our format, we say balance breakdown, we talk about additions, we talk about disposals, we talk about reclassification, we talk about revaluation. So you let the format be in your head so that whatever information is there, you just add. So we are told additional information in number one, we acquired machinery. So plant and machinery, we acquired machinery at the cost of 3,500. 3,500. We acquired motor vehicle at 2,100. Motor vehicle at 2,100. And therefore, acquisitions, 3,500 plus 2,100, we get 5,600. We get 5,600. We get 5,600. Additional information number two. Additional information number two, we are told the following non-current assets were disposed during the year. So disposal. So you get the original purchase cost of the assets we disposed, and then you capture them there, but you bracket them. So disposal during the year. Additional information number two, machinery. We disposed assets which had cost at 150, machinery that 150, but now you bracket it. And office equipment, assets which had cost 280, office equipment, assets which had cost 280, again you bracket it. And then you're told motor vehicle, asset which had cost 1750, motor vehicle, asset which had cost 1750, and then you bracket it. So you add up the disposals, that 150 plus 280 plus 1750. Our total disposals amount to 5180. Those are the disposals. The opening balance, you make the additions, you less the disposals, you get the balance carried down. 26,250 plus 3,500 minus 3,150, we get a figure of 26,600. This one gives us 26,600. Definitely this one has nothing, nothing in there, so it is 35,000. So that is the balance carried down. That's the balance carried down as the 30th of September 2017. This is the balance at the beginning of the year, 1st of October 2016, and this is the balance at the end of the year, 30th of September 2017. So for office equipment, it is 5250 minus 280, we get a balance of 5,000. We get a balance of 52, 80, 5250 minus 280, we get a balance of 4970. Then 15,750 plus 2,100 minus 1,750, we get a balance of 16,100. Then you add all the balances, plus 4970 plus 26,600 plus 35,000, 1, 2, 3, we get 82,670. That's about, if you look at this information, it's actually a reorganization of the assets account is a reorganization of the non-current asset account. So we think the balance brought down at the beginning of the year. You add the purchases or additions by debiting the account. You credit the account with the disposals, and then you get the closing balance. It's actually a reorganization of the non-current asset. It's a reformatting of the non-current asset. What do we want to get by doing the PPE movement schedule? We want to get the net book value of all the PPE so that we can capture that information and take it to the balance sheet. We take it to the balance sheet to prepare the published accounts, in line with the requirements of the international accounting standards. So now we go to this has dealt with the property, plant and equipment. Now we look at the depreciation. So we look at the depreciation. So we say balance brought down on 1st of October 2016. Balance brought down at the beginning of the year. That is given at the introductory information. The following information reads the non-current assets of Gilani Mwema Limited as of the 1st of October 2016. You are given the accumulated depreciation. 1st of October 2016 is the beginning of the year. 1st of October 2016. If we were to do the year number line, the question requires to prepare the schedule as at 30th of September 2017. 30th of September 2017, meaning the beginning of the year always is the following day, 1st of October. So it will begin on 1st of October, but on 2016. Now, the introductory information there, you are told, the following information relates the non-current assets of Gilani Mwema Limited as at 1st of October 2016. So at the beginning of the year. So the accumulated depreciation given there is the opening depreciation. And you are told freehold property has nothing, but you are told plant and machinery, it is 10,115, 2555, 200555, and 9,100 for motor vehicles. So that's the opening accumulated depreciation for each of those assets. 10,115, 10,115 plus 22,123 plus 9,100, you get a figure of 21,770. 21,770. So the beginning accumulated depreciation of all non-current assets in total, it is 21,770. Now, we are told the additional information number. So definitely, from here, we talk about the charge for the year. We are not given the charge for the year. But we have been given the number 2. Accumulate the following non-current assets. They were disposed during the year. They were disposed during this year. And we are given the accumulated depreciation. At times we are not given this accumulated depreciation. So we are given the date of the acquisition. So you compute the depreciation from the date of acquisition to the date of disposal. But here you are given. So you are told we disposed machinery. So machinery, we disposed something, and it had an accumulated depreciation of 350. So we subtract 350. Please ensure that, disposal. So at the machinery, plant and machinery, we are disposing 350. I have left the column, the line for charge for the year. So I'm capturing the disposal because it's given. Machinery and office equipment at 70. Office equipment at 70, which had an accumulated depreciation of 70, and motor vehicle, which had an accumulated depreciation of 175. On 75. Now, we do not have charge for the year. So if you look at the question, the only thing actually we're supposed to compute is the charge for the year. Is the charge for the year. But additional information number 4 tells us something. Even before you go to the charge for the year, additional information number 4 tells us, on 1st of October 2016, the management of Gilani Limited decided to start depreciating freehold property at the rate. On 1st of October, we are depreciating freehold property at the rate of 2.5%. So depreciation expense, computation. Depreciation expense computation. So freehold property, we are told it is 2.5%, 2.5, and the cost of freehold property opening balance was 35,000. So 35,123 times 2.5 divided by 100, we get a figure of 875. Of 35,000, we get a figure of 875. So the charge for the year, for the first time for the freehold property, it is 875. It is 875. Then we go to plant and machinery. Now, I like saying dates are very, very, very important. Dates are very, very important. So if we come to plant and machinery, I like capturing the plant and machinery asset account. So 1st of October 16, balance brought down, plant and machinery, we are saying is 26,250, and addition through bank. For plant and machinery, it is 3,500, and then we have disposal. We have disposal of plant and machinery of 150. Now, the date of acquisition for plant and machinery is 1st of October 2016. And the date of disposal of plant and machinery, it is 1st of October 2016. The date of disposal of plant and machinery is 1st of October. You acquire 1st of October and you dispose 1st of October. Very, very, very important factor. The date. Now, if you acquired this machinery on 1st of October, it means you used them through the year, and therefore you depreciate. The acquired machinery, we depreciate through the year. Now, this machinery, we had them here. It was, the machinery we are disposing here was part of the 26,250, but we disposed them at the beginning of the year, 1st of October, meaning we never used them through the year. And therefore, the depreciation for machinery, balance brought down. So we had machinery worth 26,250, but out of those machinery, there are some machineries we sold at the beginning of the year worth 3150. So we subtract that 150 because we did not use them in the course of the year. We had 2650, we sold at the beginning of the year, and we want to get the depreciation charge for the year. So we subtract that 150, 26,250 minus that 150, we get 23,100, and therefore we multiply the charge for plant and machinery. For plant and machinery, additional information number 3 is 20%. So you multiply by 20%, we get the depreciation times 0.2. We get the division is 4620. 4620. And then we also acquired machinery at the beginning of the year. Machinery acquired on 1st of October 2016. We use those machinery through the year. We use those machinery through the year, so we charge depreciation. We charge depreciation at the rate of 20% for the 12 months. So depreciation, it is 3,500 times 20%, but we are using them for 12 out of 12 months. We are using them for 12 out of 12 months. So 3,500 times 0.2, we get 700. We get 700. So if we say this 46, we say it is 4620 here, 4620. If you add 700 plus 4620, we get a figure of 5320. We get 5320. So our charge for the year for plant and machinery is 5320. 5320. These disposals are definitely subtractions, so we bracket them. We bracket them. So we go to office equipment. 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 We go to office equipment account, and you can see the opening balance is 5280. Balance brought down is 5280, and then we have disposal is our disposal 5250. 5250, and our disposal is 280. Disposal is 280. Dates are very important. We know the balance being brought down is always 1st of October. So that is 1st of October 2016. But we are told our disposal for office machinery is office equipment. Office equipment is 1st of January. 1st of January 2017. 1st of January 2017. That tells you this is 1st of October 2016 and 1st of January 2017. So these are 9 months. These are 9 months. These are 9 months. And therefore, these are 3 months. So we only use this equipment for 3 months. We only used it for 3 months. And therefore, the ones which we had at the beginning of the year, and you are used them through the year, it is this amount minus this. So, office equipment. So, depreciation of office equipment used through the year, that's the depreciation, that's what we are computing. It is the rate for office equipment, it is 15%. It is 15%. So 15% of 5250 minus 280. We never use them through the year. We never use the 280 through the year. So we compute its depreciation separately. The depreciation for the machine, the equipment, which we had through the year, you compute it separately. The one you disposed, you compute it separately. This one was used for 12 months. So the depreciation charge is 5250 minus 280 times 0.15. We get a figure of 745. We get a figure of 745.5. Get a figure of 745.5. Those are the machines, the depreciation for the machine, which we had at the beginning of the year, and we used them throughout. But these ones, we used them for only 3 months. Then we disposed on 1st of October. We used them for only, remember we are charging depreciation on a pro rata basis. We are charging depreciation on a pro rata basis, and therefore, this depreciation expense for disposed assets is equal to 15% again of the value of the disposed asset, 280, but we used it for only 3 months. We used it for 3 months, times 3 divided by 12. We get a figure of 0.15 times 280 times 3 divided by 12. We get a figure of 10.5. 10.5. Now to get all the depreciation, you get a 10.5, you get your 10.5, you add to 745.5 plus 745.5, we get a figure of 756. We get a figure of 756. That is a charge. That is a depreciation charge for office equipment. 756. Office equipment. 756. 756. That's the depreciation charge for the year. Then for motor vehicle, if we were to get now the one for motor vehicle, we do the same. We do the same. We do the same. Let's get for motor vehicle. Let's get for motor vehicle. Again, do the account. I like doing the account because it helps me to argue logically. It helps me to argue logically. It helps me to argue logically. The balance brought down 1st of October 2016. Balance brought down for motor vehicle is 15,750. Then we have additions of 2,100, and that was 1st of April 2017, the Road Bank. And then we were told there was a disposal of motor vehicle which had been purchased at the cost of 1,750. Disposal of motor vehicle which had been purchased at 1,750. And the date of disposal of the motor vehicle was 30th of September 2017. 30th of September 2017. At the end of the year. At the end of the year. Dates are very, very important. Dates guide you on how and how much you are going to charge for depreciation. Now you can see something very unique. Now this vehicle, although we are disposing them on 30th of September 2017, we had used it for the whole month. We had used it for the whole year. We used this vehicle which we are disposing for the whole year. And because we are disposing it here, we charge depreciation for the 12 months. So the vehicles we had at the beginning of the year, we charge depreciation for the whole month because even those which we dispose at the end of the year, we disposed after using the vehicles. We disposed after using the vehicles. So if we were to say depreciation expense for vehicles used through the year. The rate for depreciation for motor vehicles, addition to number 3, it is 25%. 25% or 15,750. 15,750. And then, so this has nothing to do with the depreciation because we used it also. Then the one we acquired on 1st of April 2017. We acquired around here. 1st of April 2017. Now, 1st of April, we have used this vehicle for 6 months. We have used this vehicle October, November, December, January, February, March. We have used it for 6 months. And therefore, Velicom acquired on 1st of April, 1st of April 2017. We have not used for those 6 months. October, November, December, January, February, March. We have not used the vehicle. You have not used the vehicle, and therefore you're using it from 1st of April to 30th of September. So we're using it in April, May, June, July, August, September, October. We're using it on the month of April, May, June, July, August, September. 6 months. And therefore, the depreciation charge is 2,100 times 25%, but we have used it for only 6 months. 6 out of 12. 6 out of 12. 6 out of 12. We acquired it on 1st of April. So we used it in April, May, June, July, August, September. 9 months. 9 months. So 25.25 of 15,750, we get 39.37. At times here we like saying 12 out of 12. We use it for 12 months. 0.25 of 15,750, we get 39.37, 39.37.5. 39.37.5, and this is 2100 times 0.25 times 6 divided by 12. We get 262.5. 262.5. You add the two plus 39.37.5. We get 4,200. 4,200. 4,200. That becomes the depreciation for motor vehicle. That becomes the depreciation for motor vehicle. So we come to motor vehicle, we say 4,200. We get 4,200. And then we add all the depreciation charge for the year. Plus 756, plus 5320, plus 875, we get 11,151. We get 11,151. Our total charge for the year, becomes 11,151. So if we add the disposal depreciation for the disposed assets, we would say it is 350 plus 70 plus 175, which gives us 595. It gives us 595. We are deducting 595. So we have the opening balance of the depreciation charge, the balance brought down. We have the charge for the year, then we subtract the disposal, the accumulated depreciation for the disposed assets. So if you look at that again, you realize it's a reformatting of the accumulated depreciation account. We get the balance carried down at the end of the year. That is September, 30th of September 2017. Balance carried out is the 30th of September 2017. But you're not dealing only with the depreciation. We're only dealing with the depreciation, not the assets. So we say here it is 875. If you add these ones, 11, 10, 115, 10, 115, plus 5320, we subtract 350, we get a figure of 15,085. We get a figure of 15,085. If we go to the next one, you get 2,555, 2,123 plus 756, 756 minus 70. We get a closing balance of 3241. We get a closing balance of 3241. 3241. A figure of 3241. Then we go to motor vehicle. And we say 9100 plus 4200 minus 175, we get a figure of 13,125. We get a figure of 13,125. A figure of 13,125. Then we go to the totals. 21,770. We add the charge for the year 11,151, 11,151 minus the depreciation disposal 595. The total depreciation for the disposed non-current assets, we get 32,326. We get 32,326. We get 32,326. Now, that is the closing balance of the accumulated depreciation as of 30th of September 2017. Now, once you get that, you need to get the net book value at the beginning of the year. So we come here and we say NBV as at the beginning of the year, 1st of October 2016. It is the original amount of money, please mark this. It is the beginning value of the beginning non-current asset at the purchase cost minus the beginning depreciation. So the beginning depreciation for freehold property was 0. Then we go to plant and machinery. The beginning amount was 250 minus the beginning accumulated depreciation 10,115. We get a figure of 16,135. We get a figure of 16,135. So the net book value at the beginning of the year was that amount. So again, we go to office equipment, it was 5250 minus accumulated depreciation at the beginning of the year, which was 2,555 minus 2,555, 1, 2, 3. You get a figure of 2696. You get a figure of 2696. Then we go to motor vehicle, 25,750 minus the accumulated depreciation at the beginning of the year, 9,100 minus 9,100. We get an opening net book value of 16,650. Once again, add them up to get the net book value at the beginning of the year, and you add plus 2696 plus 16,135. So this cannot be 0. The opening balance was 35,000, but the accumulated depreciation at the beginning was 0. So this should be 35,000. This should be 35,000. So if we say 35,123 plus 16,135 plus 2696 plus 16,650. The closing balance is 74,801. The net book value of all non-current assets, property, plant, and equipment, was 74,801. Then we go to NBV at the end of the year. NBV as at 30th of September 2017. NBV at 30th of September 2017. You get the closing balance of the asset minus the closing balance of the depreciation to get the closing balance of the NBV. The closing balance of the asset, 35,000, minus the closing balance of the depreciation, you get the closing NBV. So 35,000, 1, 2, 3, minus 875, we get 34,125. We get 34,125. Now, for plant and machinery, the closing balance of the assets was 26,600, minus the closing balance of the accumulated depreciation is 15,085. We get a closing NBV of 11,515. Now, you go to office equipment. The closing balance of the asset, office equipment, was 4970, minus the closing balance of the depreciation, which is 3241. Minus 3241, we get a figure of 4970 minus 3281. That's 281. We get a balance of 1689. Then we go to motor vehicles. The closing balance for motor vehicles is 16,100 minus the closing balance of the depreciation for the motor vehicles is 13,125 minus 13,125. We get an overall net book value of 2975. We get a closing 2975. 2975. 2975. Then we add all the net book values. We add all the net book values plus 1689. 1689 plus 11515 plus 34125. We get an overall figure of 5304. 5304. Closing balance of 5304. And that gives you the net book value. The net book value of all the property, plant, and equipment at the end of the year, it is 5904. 5904. It is worth noting when we are preparing published accounts that the PPE movement schedule is a note to the account. It's one of the notes to the account. It's one of the notes to the account. And therefore, the figure that will be captured in the balance sheet is only the 5304. But we will be having a note that if you want to get to know the details about how we arrived at our 5304, you can now come to this account and you're going to know how much assets we had, how much we disposed, how much we added, the depreciation, and how we arrived at our closing balance 5304. Thank you very, very, very much. We're through with the question. If you want to join our classes, for 16 years, we've done nothing but to help young people to pass in CPA examinations. We are a team of very well trained, very well qualified, very well experienced. And I want to ask you, get at contact with us through the telephone numbers that you can see within our video, and we will give you more details about how to join our classes. We are preparing ourselves for a mega intake on 1st of January 2025. Don't miss our intake. We are the best. We charge the best rates. You can't afford not to be with us. We take care of you and ensure that you do not fail in your exams. Thank you very much. See you. Accounting Made Simple by Samuel Muchai. Thank you very much.